welcome everyone. Thank you for joining us. And we have a guest here, Gaurav Manglik, and we look forward to sort of hearing from Gaurav on a number of different topics, which I expect to cover over the next hour. So just for introduction, so I'm founder of an early stage venture capital firm called Emergent Ventures, based in the Valley, focused on early stage enterprise companies. I'm also an advisor to Arka Venture Lab. We're one of the founding investors at Arka. And Gaurav is one of the few people in the India-US ecosystem, the cross-border enterprise ecosystem, that have actually scaled up a startup and exited a startup. So we'll have some unique insights from him. He's currently a general partner at WestWave Capital, where he focuses on early stage enterprise companies. Gaurav has been one of the early entrepreneurs in the cloud infrastructure industry. He founded a company called CliQr Technologies in 2010, where he was the CEO and was acquired by Cisco for about $260 million in 2016. At Cisco, he led the cloud engineering efforts for the Cloud Platform and Solutions Group, and also advised Cisco broadly on the cloud and container strategy, and also for investments and acquisitions. Gaurav did his undergrad from IIT Delhi in electrical engineering, did his master's from Stanford, also in electrical engineering, and holds a number of different patents in the distributed computing space, and also serves on a number of boards in his investing role. And interestingly, how I met Gaurav first was an interesting story. This is about 15, almost 17 years ago, when Gaurav was at Stanford. And there is something called the Inter-IIT Diwali Dhamaka that happens in the Bay Area every year. And then Gaurav, being a good, responsible IIT Delhi alumni, hosted all of us for the IIT Diwali practices at the Stanford Community Center. So that's where and he's was also the president of the IIT Bay Area Association for the IIT Delhi in the Bay Area. So he's been a multifaceted person who's played a role in a number of different activities. So Gaurav, great to join us. And then first, we've got a great audience from both US and India. Hopefully many of you know about Arka, but if you don't, just a quick 2-minute on Arka. Arka is a early stage cross-border accelerator fund, enabling especially Indian B2B tech startups to scale up globally, providing them capital, mentoring, and access to both Silicon Valley and Indian startup ecosystems. It is one of the first accelerators with a specific focus on the India-US cross-border enterprise ecosystem, and is backed by 3 VC firms: Emergent Ventures, BGV, which is also a Bay Area-based fund, and Bloom Ventures out of India. So, Gaurav, again, thank you for joining us. So, it would be great if you can start a little bit about introduction, a little bit about your early journey, and how did you end up in the startup world?
Absolutely, Ankur, and it's great to be here. Thank you so much for having me here, and thanks for everybody for attending. So, in terms of my background, Ankur covered some of it, but my early path wasn't too different from many entrepreneurs who have come to the US from India. It's a well-known, well-trodden path. I studied in India at IIT Delhi, and then came to Stanford University to do my master's. And after that master's program, I joined the industry as a software engineer, first at Oracle and then at VMware. And it's after VMware that I started my company, CliQr. So, it seems like a very well-trodden path. I guess the only twist to that tale is that my real goal when I first came to Silicon Valley to Stanford University was to do a PhD. And I wanted to do back then a PhD in quantum computing. And I did qualify for the PhD program. I ended up starting the PhD, but very quickly dropped out. I think looking back, probably that was a good decision. And so that's probably the only twist in my tale. How I got to starting CliQr and my startup was many factors. I think one of them was just my personal situation was such that I could take risk. My family situation, my immigration status in the US, all of that was at a point of time where I could take more risk. But more importantly, what I felt was that given the industry experience that I had at my first two employers, Oracle and VMware, I had enough confidence that I knew enough about that domain in which I used to work that I can start a company. And then what also really helped, as Ankur pointed out, was the community that's here in Silicon Valley. For example, the IIT community was very helpful. And as we used to meet for IIT Diwali, there were many of us who were actually in a similar mindset and wanted to go out and start a company of our own. In fact, I remember from those IIT Diwali Dhamaka days, there were others like Rishi Bhargav who ended up starting Demisto, which also was a very successful company and an exit. So multiple factors came together and gave me the confidence and encouragement that if I were to, leave my full-time, very cozy, very comfortable job, I should be able to start a company. And I'm sure we'll talk more about the journey. And in some aspects I was probably wrong, and in some aspects it turned out to be great.
Great. No, thank you for sharing that. So, since you alluded to that, maybe let's talk about your entrepreneurial journey. In terms of CliQr. Tell us a bit more about, what was the journey like? What were some of the key takeaways to keep in mind when building sort of a company of that nature?
Yeah, I think Ankur, there are too many to share. In fact, one of the first things I did when the company exited was I created a small little notebook of all the mistakes I made and all the learnings. So it's too many, but I'll touch upon I think the most important ones. When I left VMware to start CliQr, I was really passionate about an idea, but my background was completely technical. And so coming from a technical perspective, the hardest part for me starting a company was the business related aspects. I had an idea in the cloud space, which theoretically made a lot of sense, intuitively made a lot of sense. And from anecdotal customer examples that were out there in the industry, I thought the idea was great. Now, what I very quickly realized was that from idea to execution and finding product market fit is a significant challenge. What to you as an entrepreneur might seem very obvious, convincing others to buy into that idea is not that straightforward. So for me, learning about how to sell my idea, how to sell my product, finding the right product market fit, where should I go first, where should I go next, that was a hard journey and took me quite some time to find the right fit. And I think that's probably the number one learning for me coming, starting a company as a technical founder. Now, over time, I did learn a lot about business and I ended up pretty much running sales in my company, but that journey was not straightforward.
Makes sense. If you were to do if you were to do CliQr right now in 2021, what would you do differently?
Yeah, I think there are some things that wouldn't be different at all. And some things would be different. I think the things that wouldn't be different at all are related to these time periods. When I started in 2010, we were going through a recession back then, and now in 2020 with the pandemic, with the coronavirus, obviously there is a recession. So I think one of the things I wouldn't do differently is have the same passion and energy which I started out. So independent of whether it's a recession or not a recession, if you have a good idea, it shouldn't really matter around timing. In fact, when I started in 2010, I didn't really even realize that there was a big recession going on. I was so much into my technology that I just jumped right in. Had I known that it was a really bad time to start a company, I might have actually delayed it. So the thing I wouldn't do differently is if you really are passionate about your idea, you feel there's a market for it, you feel your technology, your IP is innovative, it doesn't matter when you start the company. And in fact, it's a cliche now. I'm sure everybody's seen this in the one blog or one article or the other, but some of the best companies have actually started during times of recession. So that's the one thing I wouldn't do differently. If you have an idea, if you are doing, if you're passionate, just go ahead and start a company. I think what I would do differently are all the mistakes I made, and that's independent of whether it's 2010, 2021, 2015, 2016, the time doesn't matter. And the thing that I would do differently is trying to get that product market fit faster and have as many outward facing, customer facing conversations as possible to really find that product market fit and refine the idea as soon as possible. In my case, in the beginning, I was almost shy, I would say, in talking to customers. And part of that had to do with my technical background. I thought the idea was automatically intuitive, automatically obvious, so people should adopt it. But when I started going out in the field and testing it with customers, all sorts of objections started arising. And the sooner I had discovered those objections and addressed them, the better it would have been for me. So, one thing that I would encourage everybody, and especially from the Indian ecosystem, most of us tend to have more of a technical background rather than a business background when we start our companies, is to really test the market as soon as possible and find that right market, the right product market fit to refine your product.
Makes sense. Especially talking about the Indian ecosystem, a lot of the entrepreneurs Arka focuses on are sort of the cross-border entrepreneurs, and your company was a cross-border company. You had about 50 people in India, I think, in terms of your team. Managing time as a founder is hard. Managing at a cross-border startup is even harder with the time zones and everything. So tell us about how did you prioritize your time? How did you manage time as an entrepreneur?
Yeah, that's one of the toughest things, as you pointed out, Ankur. What we did was we created our India office very early on. So even before we were 10 people, we started an Indian office. And what we found was the key for that was to have a really strong leadership group. In the beginning, a single leader, and that leadership team expanded over time. But to have very strong local leadership in India, which then can help a lot from a time management basis. Because, now, for example, I think it's 13.5 hour difference, changes to 12.5 hours. But it can be really excruciating because a few moments you have during early morning or late at night, maybe you want to spend some time with your family, but you still end up having cross-border calls. That you can avoid that if you have a really strong leadership in different geos where you're expanding to. And having leadership is important, but also training that leadership. So one of the things that we did was in India, we would often, give sort of a training presentation to our leadership. Even though the leadership was an engineering leadership, they were trained to a point where they could stand up in front of a customer and deliver our pitch. And so, that way the team in India had complete ownership of the idea, of the product, of the company as well. And that meant that there was enough, in India itself, there was enough independence where without a lot of guidance, they could actually, move the company forward. So what I would, encourage a lot is to develop that leadership very early on. I was just talking to a company yesterday, and they're very early. They have a few engineers in India, but the engineers in India end up reporting to a leader in the US, and that's just very hard to do. I think it's really important to also have a counterpart in India that can take ownership.
The person that you found who was leading the India, was that a person you had worked with in the past, or was that a new person you hired?
In my case, it was a person we had worked with in the past. So we knew him, and we recognized his potential, and wanted to also train him. As part of it, being an entrepreneur is you obviously are going through your own career growth, your own journey is helping you evolve, but you also have to pull everybody around you with you. And so that was one person that we recognized very early on who can do that for us in India.
And the point you just talked about giving them leadership sort of coaching so they can be in front of customers. How did you make the India team feel more engaged or more informed of what's happening in the market and the customers? Can you talk more on the tactical side? What are the kind of things you did? Because I think a lot of companies could benefit by doing things of that nature.
Yeah. I mean, on the tactical side, we did everything that we would do in the US, and we often would actually combine things like our all hands meetings, so that it's a global all hands, India and US are together. But we also would have a specific India specific like monthly meetings where we would give the state of the company, state of the art, state of the union, talking about everything that's going on in the company, revenue wise, costs wise, customers wise, partners wise. So everybody felt that they're part of the company, and it's not like they're an appendage of some kind of a US company and they don't really know what's going on. We would talk about customer examples, customer use cases, what are the key features that people are asking for, but then very importantly, also talking about all the problems that the company is facing. And when you start talking about the problems and the challenges, you see that everybody in the company comes together and they feel that they are part of bringing the solution also forward. And so that constant communication was really important. And then as we started getting customers, engaging the company in those engaging the India team in those customer conversations was also really important, as I said. So often we would, over time, our initial customer base was in the US, but then we started ending up having partnerships in India, customers in India. We had partnerships, for example, with Wipro in India. And so then having the India team involved in those conversations directly was also very key for giving that team a sense of ownership. And then last but not the least, obviously it's a little bit difficult in this environment, but also, travel between the two places, having US folks travel to India and having Indian people come to the US on a regular basis was also very important.
In terms of the functions, obviously engineering you had in India, were there other functions, I don't know, customer success or other capabilities that you thought about or experimented with having in India?
Yeah, obviously we started out with engineering. Every company starts out with engineering, but over time we did expand the functions in India. So we did expand. Customer success came next. As a global corporation, and the kind of customers you have are enterprise customers, often you have to address 24/7 needs. And so having customer support in multiple geographies was key for us. So we did expand customer support. We also started expanding to sales engineering. So having people in India that can help on the sales side was also important. And we were probably on a trajectory where we would have started hiring field sales in India as well. But by the time we could do that, we got acquired.
Got it. And how did you, again, double clicking into your training aspect, because I think that's often a big challenge with companies targeting the US market. Obviously there is, they can find some talent, but oftentimes talent could be raw, or getting the talent ready for serving your enterprise kind of customers in the US sometimes can be challenging. So what kind of, again, tactically speaking, what are some of the training and how did you build that training capability, and what kind of things did you have to learn there to do that effectively?
Yeah, I think training is key, whether it's in the US, in India, or you have employees in Europe, doesn't matter. Training is always key. And training, what I found was that one should have sort of high-level onboarding when an employee is first joining the company, a high-level onboarding that talks about the company's charter, the company's vision, giving a new employee a demo of the product, a product pitch, just like one would do to a customer. I think that's really important. So just the basics and the fundamentals of what you're doing, why you are doing, why are customers interested in what we are doing. I think that initial onboarding is really important. And then specific to the function, whether it's engineering, it's customer support, sales, or marketing, specific training around that function, deeper training is then needed. But always starting with the basics is really important. And I think very often what happens is you hire a new engineer and you immediately give training on the engineering aspects, the code, and your DevOps processes and whatnot. But what happens is the person ends up missing the big picture as to why he or she is even doing that. So that initial onboarding, a high-level picture of what's going on in the company is really important. And then as we expanded as a team, we also started having proper HR processes in place. And as a startup, I would encourage you to do this sooner rather than later. Even though you're a small company, you're a professional unit, and having well-defined HR processes that talk about how a person can grow within your company, how you work on bonuses and stock option grants, giving that visibility and having an HR onboarding is also really important. All of this happens in large companies. It happens at Cisco, it happens at Oracle, it happens at VMware. Now you're a startup, you're fulfilling your dreams. You should be doing the same things in your company too. So all of that gives employees more confidence, your team more confidence around what you're doing, and makes them feel a better part of your company. And again, for me, that was a learning. I don't claim that I always did it well at CliQr. Over time, however, it became really important for us, and we started doing this.
Makes sense.
So back to your question, Ankur, if I were to make one change in 2021, that would be another change. Just have those things in place day one.
Got it. Makes sense. Talking about maybe the growth side of your company, you put in sort of this foundation in terms of engineering. Tell us a bit in terms of what were some of both the challenges and the learnings there in terms of how do you inflect the company on a growth path?
Yeah, the number one challenge, Ankur, and you'll see this as a theme in what I'm saying today, is finding product market fit. That's the first challenge. Even before you can grow, just making sure you have found product market fit is really important. And early stage startups often feel they have got product market fit. They talk to a few customers, they've got a few, early customers, and they think it's done. It's not typically always done. And that's where the most mortality rate is. That's where most startups die. And so getting that first is really important. It's really important to
just
not
double click on that. So you're saying the challenge could be that, hey, you got a few customers and you think you've got it, but that niche may be too small. And then once you go a little further, you figure out that, okay, 1 in 100 customers may be suitable, but for you to succeed, you need, 20 out of 100, for example, sort of to.
I'll give a concrete example. So I might be going into a little bit more details here, but it might be helpful for the audience.
Yep, that'll be helpful.
So in my particular case, our whole thing was that companies want to move applications to the cloud, and we had a technology, a solution or platform that helps you run your existing applications on cloud environments. And so as a good engineer, I started from theory first, and theoretically, it seemed like the best applications to move to the cloud are high performance computing, HPC applications. These applications tend to be highly bursty, and the whole value proposition of the cloud around pay-per-use compute would be highly appealing to such applications, because you're not going to spend too much money on a data center. If that data center is only being utilized 10% of the time for such bursty workloads, by moving to the cloud, you can reduce your data center expenditure by 10x. Not only that, on the cloud, you can distribute the computing, you can get practically infinite scale. So you can also get a 10x performance advantage. So overall, on a price performance basis, moving such applications to the cloud is a 100x advantage. Mm-hmm. And that holds true today also. On the other hand, if you move a different kind of an application, let's say like an enterprise ERP application, moving to the cloud doesn't make a lot of sense, because these are applications that run 24/7. They don't have a lot of scale requirement. So the benefit from the cloud is very minimal from a cost performance perspective. So I did this theoretical analysis, and based on this, I thought that the best market to go after is the HPC market, because that's where the maximum ROI lies. And so, we started addressing that market. We got a few early customers, and we thought, hey, that's great. We found product market fit. We should double down on the HPC market. But very soon we found out that actually, even though theoretically the ROI was the best in that market, selling in that market was really hard. It was a niche market. It was a smaller market. The customers didn't really feel the need to move to the cloud as much as we hoped for. And then as we got deeper into the market, we also realized there were other issues, such as the applications themselves being controlled by the vendors. And so very quickly, we had to then go to the other market, which was a broader, larger market. Customers were more willing to experiment, more willing to innovate, and that was the broader market for web applications. But that journey from going from that first market to the second market probably set us back by at least a couple of years, which in startup time is actually a long, long time. So, and again, if I had had more customer conversations, more more field experience, more field work and experimentation, I think we would have pivoted to the right market early on rather than later.
Makes sense.
So that's the first thing. Just finding that product market fit. That's the first thing. And I see a lot of companies also over hiring on sales. They think they have a product market fit. They start onboarding sales people. And it might be too early to hire salespeople in the beginning. It's really important that the first 10 customers, maybe it's 5, maybe it's 10, maybe it's 20, the exact number can change. Those really have to be obtained by the founders of the company themselves. And when you feel that you have done that, that's the right time to start onboarding salespeople.
Makes sense. I agree 100%. Typically, the founders are the best salespeople early on in the company.
The way I see it is, if you can't sell what you have built, it'll be very hard for you to explain to a salesperson that you have hired and train that salesperson on why they can be able to sell the same product or solution. And so you need to go through that journey, as hard as it might be, as uncomfortable as it might be. You have to go through that journey on your own. And
also, a lot of salespeople don't want to join a startup unless they've seen some proof of success. So if you haven't sold, then salespeople may not be attracted to join your company. let's talk a bit the step, sort of the evolution after that, which was around the acquisition. Walk us through a bit, but how did that come about? What was sort of the decision at that point, and the process of exiting Liquor?
I mean, every startup goes through this. The first thing for us was that we never always thought about acquisition as an exit goal. The exit goal was always that we're going to grow big, we're going to go to the end, this company will go IPO. I think you have to set the bar really high for an acquisition to happen to begin with. Many times entrepreneurs just start out thinking of the acquisition as the target, as the exit. I think that's wrong. You always have to shoot higher than that. Only when you shoot higher, you'll find that actually there are challenges and problems that you might have to just exit as an acquisition. So that was the first thing. We always were running very hard, driving very hard towards building a big company. And when you do that, you find that acquisition opportunities naturally come along the way because you're growing, you're successful. There will be potential opportunities for you out there, and there would be interested buyers. And that's kind of what happened in our case. We had interested buyers. Cloud computing, specifically what we were doing within cloud computing, multi-cloud was becoming extremely strategic to many large players. And so we were naturally getting approached for acquisition exits. So the question for us was, should we sell or should we not sell? And obviously the acquisition price itself and the investors' input, whether they want to get liquidity at that point of time from their investment or not, is a key factor. But the other factor is really the founders and the entrepreneurs themselves, what they think about exiting. And for us, one of the criteria to decide whether we should sell or not, apart from the acquisition price itself being compelling or not, was our sense of the market. At that time, we thought that technically we were the best product in the market, but there were many other competitors appearing as well. And to keep innovating while competition was potentially could catch up would have been harder. It would have meant for us to raise more capital. It would have meant for us to rapidly expand sales teams. And we thought that that could pose an execution challenge at that point of time. And under the umbrella of a larger organization, in our case, Cisco, we could actually sell and expand the technology and the product much faster. And so that was one of the reasons that went into the thinking. The second reason, which in hindsight was the wrong reason, was we thought that there's an election coming up, there might be a change of government, and there might be a recession happening soon. And so we were also a little bit risk averse around that. In hindsight, that never played out, and the market kept actually growing. And especially in our case, the multi-cloud market has grown a lot since then. So, hindsight is 2020. Maybe we shouldn't have sold, but that was the kind of thought process we went through at that point of time.
Got it. So you knew Trump was coming before the rest of the world knew.
I don't know about Trump, but definitely, valuations were getting hyped, and so we were a little bit worried about that too.
Let's talk about post-acquisition. So, after the acquisition, obviously, then you transitioned to a larger company, Cisco. You ran the group there. Then, obviously, after that, you moved to sort of WestWave. So, talk us a bit. How was the post-entrepreneurial transition? After that, and how did you sort of come into your current capacity?
Yeah. So, I think I'll talk more about the challenge because most of it was really good. So instead of just focusing on the positive points, I think the post-acquisition, Cisco is a very well-known acquirer. I think when we got acquired, Cisco was acquiring a company every month. So they're really good at tactical integration of acquisitions. Once a company is in, getting them to be part of this broader machine, which is Cisco, that was done really, really well at Cisco. So, I'm going to focus more on what we had to really think about in expanding the technology and its outreach. Now, suddenly we went from, a few salespeople to thousands of salespeople at Cisco who could sell the technology. So the main challenge that we had to address was how do we get this machine to work for us? How do we start, from training a few people in a smaller company to thousands of salespeople and tens of thousands of partners that Cisco has? so that we can really start pushing the technology out. And that's not a trivial piece to solve at all. You want that machinery to work for you, but making it work is not easy. So there was a lot of work we had to do originally to make sure that we can travel to different Cisco sales locations, train all the salespeople. They were not naturally acquainted with selling newer software technologies in the cloud. So that training program was really, really important. And again, it was a learning from my startup as well that training is key. And we just had to continue that at Cisco, but at a much larger scale.
Got it. Makes sense. Makes sense. And then what about the transition into sort of WestWave? Was that?
Yeah, no, that's been great for me. That's been a lot of fun. As an entrepreneur myself, I really enjoy working with other entrepreneurs. So that's the most exciting part of my job. Helping others out. I knew that as an entrepreneur, I was often frustrated with my VC conversations, not just necessarily people who invested in CliQr, but other VCs as well when I was trying to raise new rounds. And I just feel that I can be a friend for the people that I'm working with and help them through their journey. And that for me has been a lot of fun. So even though I'm on technically the dark side, I still feel like an entrepreneur. I think the one thing that I'm learning personally is because I still have that entrepreneurial mindset, I am often itching to get my hands dirty and help my CEOs and their sales pitches and all of that stuff. And sometimes I just need to learn to hold back and let them do their thing.
Makes sense. No, I totally understand what you're saying. I have a couple of more questions, and then we'll take some audience questions. So, audience, feel free to sort of think about your questions. Let's talk about the board. You've obviously had a board with a number of investors, CliQr, and now you are on a number of boards as an investor. So both sides. One is as an entrepreneur, what some best practices to manage a board well, and also as an investor, what are some things that you look for in terms of making boards effective?
So definitely don't under communicate, don't over communicate too. If your board is your typical board member might be involved with many companies. If you're over communicating, also they might get frustrated that looks like this team needs a lot of hand holding, babysitting. So you want to communicate the right amount. What I encourage everybody to do is send a weekly, and if not a weekly, a bi-weekly email update. And that email update is a very short update. It shouldn't take you more than 15 minutes to type up that email. If you're doing something that's taking you more than 15 minutes, you're probably typing the wrong email. And in that email, you're just giving a very high-level overview around the KPIs, key things that you have accomplished, and the key problems and challenges you're facing. If you send such an email update to your board on a regular basis, you'll find that your job and your task has become much easier. And it's really a very simple email. Your first section can be on customers. Have you got any new customers? What are the challenges you're facing? Partners can be a second section. Product can be a third section. Team can be a fourth section. And competition can be a fifth section. And actually, the last section should be your financials, which talk a little bit about how much cash you have at hand, when is your cash out date, if there are any key KPI metrics like ARR, annual recurring revenue, cash burn. If you send a very simple email to your investors every week, they will really appreciate it, and they will actually feel that they will actively be thinking about ways in which they can help you. Really, as a CEO, as a founder, you should know all these things at the tip of your fingers. So typing this email should be really straightforward. You shouldn't be logging into 10 different SaaS screens and getting all the data. It's a very simple email. So that's one thing I would encourage everybody to do. And that's just the right kind of communication. It's not like a daily communication or something, but just enough data that you can keep providing to your investors on a regular basis. The other thing I would do is, many board interactions, they end up being very, very superficial in the sense that it's only the positive and the good news that gets presented. But if you have a very even-keeled presentation about, hey, these are the good things that are happening that I'm really excited about, but at the same time, these are real challenges that I'm facing, you'll find that the board to be a lot more friendly and a lot more helpful to you. If it's just positive, things, when the challenges do come, they just end up coming up as a surprise. and that takes board members off their guard. So having a regular, even-keeled presentation to your board is super important.
Great advice on both of those things, and I've seen entrepreneurs could do better on both of those aspects. So good points to make. In today's environment, obviously post-COVID, since over the last year, more and more companies are following distributed teams. There are news of people moving out of the valley. There's obviously growth in the Indian ecosystem. What's your overall view on the geographic sort of landscape for entrepreneurship, especially in context of India's role in enterprise ecosystem, on the valley's role, and how are you seeing some of these trends play out?
I think, Ankur, distributed teams are here to stay for sure. And even pre-pandemic, most of the startups we had invested in had distributed teams. So that's not necessarily new. And COVID has obviously accelerated that. So that's not going to change. Distributed teams are here to stay. In terms of Silicon Valley's role, I think Silicon Valley is also here to stay. I don't think many people are talking about Silicon Valley vanishing. I don't think that's going to happen. There's still going to be Silicon Valley. There's going to be innovation here. But what I truly believe is that there'll be multiple Silicon Valleys. The need for innovation, the demand for innovation, the demand for digitization in the enterprise is growing so much that one place alone, Silicon Valley, cannot satisfy the need. And so you'll have multiple centers emerge within the US and outside the US as well. We're already seeing, a lot of really cool companies come out of India. We're seeing a lot of cool companies come out of Europe as well, some from Australia. So we'll see multiple centers of innovation, and we'll see these centers of innovation collaborating, coordinating with each other, using distributed teams. So I think that's going to be the way of the future. I don't think that one place is going to go down and one place is going to go up. It's not a zero-sum game. It's everybody sort of getting onto the bandwagon, if you will.
Makes sense. Definitely, there is, people often overhype sort of what's happening. So good to get your perspective. We have a few questions from the audience. We can take those. So Gaurav, I don't know if you can see the open questions. So one question is around your advice on to get advisors. Should we be worried about dilution? What's your guidance on board members? How to select them? No.
Definitely don't worry about dilution when you're getting the advisors. That's the last thing to worry about. And that's one of the mistakes that entrepreneurs make most commonly: unwillingness to give away, whether it be stock or even control. And it's really important to onboard as much help as you can and delegate as quickly as possible. So definitely get advisors. But the challenge with getting advisors is many people do get advisors and they get them for their brand name. It's just pretty pictures on your website. That's not the best use of your advisors. You really want to get advisors that you can, ask for help, and they can truly help in multiple ways. And so, my comments around involving your board, I would do the same for your advisors. I would send, regular updates, email updates to your advisors. I would, maybe set up a meeting with your advisory committee and ask for concrete help, exact action items. Very often advisors go unused, and I think that's the wrong thing. So get advisors for the right reason and utilize them. But don't worry about equity. I think the equity is worth it if you can really use them.
Got it. Makes sense. Then we have another question from Rajesh. Can you share about how you dealt with approvals from clients around risk management, GDPR, data security? How long was that journey?
With the learning curve, I think things are even more stringent now in terms of compliance and regulations. So we had to create our InfoSec program. We had to document it really well, and get all the right compliances in place. Now that was a bit of a process. Nowadays, I'm finding that to be a little bit easier. It's still a process, but even younger startups, which would typically take 4 or 5 years in the past to get PCI compliance, SOC 2 compliance, are now getting that done within a couple of years during their first phase. I think it's a key part of selling to the enterprise. So keeping security in mind, keeping compliance in mind is part of your architecture day one is mandatory, if not critical. and working towards those compliances can really ease the procurement and the selling process to the enterprise. So definitely do that. I highly encourage you to do it. In my case, it took us some time to get there, but we typically had to go through lengthy security reviews and with our customers' security teams. So that's kind of a requirement for sure.
Makes sense. I'll let some of the people ask questions directly. So Atul, I know you have a question. Do you want to get on video and ask the question?
Hey there, Gaurav. Thanks for the talk. Very inspiring and exciting journey. One question which I had, especially for global startups, is really about sales and any other teams that typically require either centralization or require actually a distributed team setup. And if you are very if there is a religious battle around that at times, saying that these teams have to be centralized, but these teams have to be distributed, would be great to get your context on that.
Yeah, I mean, I think engineering is the one where I feel people tend to centralize engineering.
Right.
But it's just practically not possible to do that in today's day and age. And I think with remote work becoming easier and easier, I don't see that battle happening very often in terms of engineering. So now in engineering, you can't have too much of a distributed team. You can't have like 10 locations. It's probably just 2 or 3 key locations that you have. Very commonly the kind of setup I see is there's a team in the US, there's a team in India, and there's a team in Europe. And that also gives a pretty good time coverage in terms of fulfilling 24/7 needs that customers might have. So I'm seeing more of that as a model for engineering. Sales is, if it's field sales, direct sales, that's always distributed. That's the very nature of sales. So there, I don't think there is any controversy that I've seen in the past. And then maybe some of the functions around product marketing, product management, they tend to be more centralized. And typically those teams are not very large to begin with. So it's okay to have them in a single location, maybe.
Got it. One
does that answer your question?
No, absolutely. I think that absolutely does. One follow-up question actually is if you have actually seen, especially for enterprise startups, inside sales being more centralized, especially a lot of outbound messaging or inbound messaging, from a training perspective. I know there is the language part, which is always a little tough to manage.
Yeah. So actually that's changing, Atul. I have personal examples I'm happy to share offline of teams companies having very successfully, after finding product market fit, have their entire inside sales team based out of India and being able to sell to US customers. They're selling on the phone 50,000, 50K deals on a regular basis. So I think that's very much possible, having sort of an inside sales team out of India, selling to different geographies. There are well-known examples out there. Happy to share them with you offline. The key to make that successful, again, is training. And having a sales leader train those people, give them feedback after every customer call, keep improving the process. That's key. It's very hard, requires a lot of effort, a lot of work, but that's the key to make that successful.
Got it. No, that's super useful. I'll actually reach out for some more context, but that'd be great. Thank you.
Absolutely.
Satish, looks like you have a question. Do you want to get on video and ask your question?
Hey Gaurav, good to meet you.
Hi,
So,
Satish. Long time no see. Long time no see.
yeah, long time no see. Long time no see. Good discussion. Thanks a lot. I was just wondering, and maybe you've helped us a lot in this process as well. But how do you, when you were going through this journey, how did you think about for the first 2 years the hiring plan, right? Especially when you're optimizing to get to MVP, like you mentioned. How did you think about it? Yeah.
I mean, you have to look at your hiring plan in context to your top line, your revenue milestones,
Yeah.
and you, and then look at what kind of investment you need. People
Mhm.
often turn the turn the problem upside down. They first think what kind of investment should we raise, then create a hiring plan around that, and then create a revenue plan around that. It should actually
Yeah.
be really the other way around. Probably should have a revenue plan, and revenue plan is really driven by, it's kind of subject to when you find that product market fit, when you find the repeatability, and then beyond repeatability, when you find vectors for scale.
Mhm.
Then backing off from that, you look at your hiring plan. Okay, until product market fit, I really probably don't need a huge sales team. That's probably a big expense. After I find product market fit, that's when I start, adding engineers to now work on my vision features. That's when I start, expanding my sales team in multiple geographies. Then the next vector is, okay, once I get the repeatability, now I want to access other vectors of growth like partnerships, right? So then maybe I need to start hiring people for partner programs, managing channel partners, SIs, and so on and so on. So then you will see your headcount ramp
Mhm.
based around those milestones. Then you do simple math, right? Okay, this is my revenue, this is my headcount.
Mhm.
Most of the expenses in software startups, especially, are driven by headcount. 80% goes to salaries and related overhead. Then that should drive your funding plan.
Mhm.
And so,
Makes
many often I get asked this question: how much money should we raise? It's really this plan that should drive it.
makes sense. Makes sense. So just to follow up one, just to be respectful of the others as well. So how do you think about product, and how do you think about product marketing, especially in the early stage, right? So for enterprises where if you're targeting the mid to large enterprises, how do you think about product and product marketing in particular in the early stage?
The first thing is to let me back up. I think the best product marketing is marketing through your customers.
Yeah. Yeah.
Right. That's in the enterprise that works the best,
Mhm.
because otherwise there's just too much noise and all
Mhm.
websites look the same. And even if you read a Gartner analysis, it's not really clear what product to buy or not. So the best marketing is by having referenceable customers to begin with. The first goal is to just build a product for your first 5 to 10 referenceable customers. Until then, you might not even need to do a lot of product marketing. You might just have a basic website in place, good positioning, but you just through your network, through outbound, as an example, get your early set of customers.
Mhm.
When you get that early set of customers, then you start creating sales plays, case studies, use cases around that. That's when you start kicking in product marketing truly. Now,
Mhm.
this could be different for maybe more of a PLG driven approach where it's a bottom up market. You're selling to individual users in enterprises as opposed to top down sales. There maybe you could be more aggressive on product marketing to drive more inbound.
Mhm.
That really depends on your product and the persona that is going to use the product. But I would say that really focus more on marketing first after you have that early set of customers.
That makes sense. Makes sense. Thanks, Gaurav. Yeah. Thank you. Yeah.
Thank you.
Aditya, you have a question?
Yeah, Ankur. Hey, Gaurav, you mentioned the aspect of remote and distributed teams existing pre-COVID, right? I mean, people have been working like this. But two sides of the coin, right? One thing is, if you look at people starting up during COVID, or just before COVID, or at this time now, it's predominantly scenarios where even founders are remotely building this, right? I mean, they're not at one place, and then they are, scaling and building a team. So my question was around, it's enough challenging to actually build a startup. I mean, where you have people together, but when you have like your founding team, core team, remote and distributed, how do you kind of emphasize and build culture, right? And that's one question. And second thing is, being in the VC world and talking to startups and partnering them. In terms of when you look at a startup, what aspects of culture do you look at? I mean, is that a very important thing as a part of your investing thesis now that companies are going to be more and more remote and distributed?
Yeah, culture is something that gets built over time, and we invest in a seed stage startup, so we're just looking at the founding team in many cases, just the founders that are part of the company. So I guess culture is maybe not the best word to use.
Mm-hmm.
As investors, what we look for is the passion, the motivation that the founders have. How they think about that space in general, but how detailed they can be. I think a lot of entrepreneurs I meet tend to skip over the details, but I think knowing the details is really important. So we look for things like ability to execute, ability to be persistent, ability to think intelligently about your space. All of those are really important. But let me go back to your first question. I think it is challenging during the pandemic for even founding teams to interact because the founders might be in different locations. So that is definitely a challenge. Hopefully the situation is temporary and it's going to go away in a few months with all the vaccinations and whatnot. Mm-hmm. But even there, one of the things that I've seen portfolio companies do is have, maybe if you're having a monthly all hands, instead of a monthly all hands, you're having more of a weekly all hands. You're having more frequent conversations with your team about the status of your company, how things are going. And I think that's the best way to help with culture. People try also the other things as well. They might have a happy hour on Friday and whatnot. I think those are useful, but those alone don't solve the problem.
Got it.
The challenge is really solved by communicating with your team and making them, letting them know what's happening, right? We talked to customer A. Customer A said 10 things good about the product. They had 5 negative things to say. This is what we can do as a team to fix that, right? Having that very honest, straightforward conversation, I think, is key to, especially in this remote environment.
Got it. Thanks, Gaurav. Over to you, Ankur.
We have a question from the audience. There's you started a horizontal software company of moving HPC workloads to the cloud. And then how did you go about building a sales motion around that industry vertical? And how do you expand into other verticals?
Yeah, so the HPC vertical for me did not work out, as I said, right? That was actually the wrong choice. We did have customers in the HPC market, but breaking through that industry was really hard. So what made us easier to go to a different vertical was that the same product was applicable to multiple verticals, multiple application types. So technically we were safe. Technically we could address different markets. It was just which one do we go after first from a sales perspective. So, given the challenges we had with HPC, very quickly we pivoted towards other kind of applications, such as your standard web applications, custom-built applications that most enterprises are running within their environments in IT. And that worked out really well for us. And there it was not so much about the vertical for us. It was more about what is the use case within the enterprise IT that we should be targeting, what kind of persona, what kind of business buyer, economic buyer, technical buyer should we be looking out for, and then trying to figure out how to qualify an opportunity. Where is this customer in the phase of their journey when it comes to cloud adoption? Are they too early? Are they too late for us? Once we figured out those signals, then it just became a matter of pattern matching. And that was the discovery, basically. We came to a point where we could clearly identify whether this would be a good customer lead for us or not. Are they already on the cloud? Are they not on the cloud at all? Are they midway? Do they have, for example, a role of a cloud architect in their organization? If they don't have that role, probably they're too early. We might just end up educating them. They might not really transform to an actual customer. So we started seeing those signals. Once those signals became clear, then we could really push the gas, push the pedal on hiring more salespeople and growing the company.
Got it. Makes sense. Makes sense. And I have the last question, audience question. What should be a balance between hiring software engineers versus contractors?
It's very situation dependent. It's based on the kind of product you're building. I think contractors work great as well, and so do full-time teams. So a lot depends on your cash situation, how much cash you have or not. I would recommend that some of the core IP, the core technology pieces that are always going to be important for your company, you do that through your core software engineering team. And then peripheral parts around that could be contracted out. That's the typical thumb of rule. But more and more, I'm seeing companies contract out even their core engineering to contractors, and it's been successful. Depends on the situation, depends a lot on the kind of technology you're building, and I wouldn't be shy in using contractors.
Got it. Sounds good. Sorry, go ahead.
Yeah, I mean, one example I had was user experience was a big challenge for us. Again, as sort of back-end technologists, back-end engineers, UI was the last thing that crossed our minds. So we always delayed hiring UX, and we ended up starting with UX contractors. But that's one area where we thought it was important enough for us to hire an in-house UX team. And we ended up building an in-house UX team rather than contracting it out. So that was one choice we made in our case. You really have to see what's core to what you're doing and what's not core to what you're doing. And UX, in my case, was something that we should have treated as core to begin with.
Makes sense. Gaurav, if people want to run their startup, by you or want to explore collaboration, what's a good way for them to contact you?
Well, I could give my email address here in the chat window, so please feel free to send me an email, or you can always go to our website. It's www.westwavecapital.com, and you can contact us from there. Or I'm pretty active on LinkedIn, so you can also send me a LinkedIn note.
Great. All right. Thank you, Gaurav. Thank you for joining us. Wonderful for you to share your learnings and your journey. And I'm sure people will reach out to you with more, ways for you to collaborate with them. Thank you.
Thank you, Ankur. Thank you so much. Thank you, everyone.
Thank you, everyone. Thank you. Bye-bye.